This is Ospreyeye from MyChartCoach.com, and we're going to look at ticker symbol PULM. Okay, very nice move today. This ticker has been on an incredible run. We have been following this since the break back here on the 17th above the 50-day simple moving average. That was our alert, along with this big volume spike that it was in play. We waited for this 100-day simple moving average to turn into support. It finally did, and on the 25th, this big volume spike was the green light that it was ready to run. It proceeded to test the 200-day simple moving average, and then finally on Thursday it broke above that level, and it hit the 300-day simple moving average and pulled back. And so we didn't know if it was going to top out at that level or not, and so we were looking for a break back above that level to signal more upside, and that's what's happened today, and it's pushing up higher again today. So this is just an incredible move, very, very strong. On a pullback, the 300-day moving average at 229 is the key level to hold, along with the EMA4 at 221. If those break, there could be a drop down to the 200-day moving average and the EMA8 and the 175 zone. As you can see here, EMA8 has been holding on the pullback, or throughout this run. Notice there's a very strong uptrend. As long as candles keep riding the EMA's 4 and 8 support higher above the middle Bollinger Band, this will be a very strong uptrend, and there'll be more upside potential. It's just right now you're looking at overbought levels, 82 on RSI, and notice it's peaked at this level before. And then now Fasto's at 89, and so it remains to be seen if PULM can keep cruising higher in the overbought power zone. Notice there's a big volume behind the move, huge volume. The MACD is getting very steep. Look how it's parabolic here. This is like a double black diamond, and so when MACD gets really steep like that, it's a signal that the run is unsustainable. And so when runs get unsustainable, just be careful that the top could be coming soon. So if you look here, when you have a stock breaking out on the daily chart, what we like to do is we like to go to the weekly chart to see what that looks like, to find the next resistance levels. And then you can see here on the weekly chart, for this chart, each candle represents 1 week of trading. The RSI is above 70. You can see here it's at 75, and you've got Fasto above 80. So it's overbought on RSI and Fasto. As you can see here in the last year, this is the highest levels it's been in the last year. So this is the biggest move this company has made in a very, very, very long time. Notice this multi-month downtrend. This is a very, very long downtrend that is breaking today, and has broke out big today. But this is actually a 4-week run. Notice there's 4 white candles in a row, and last week the bullish development was the close above the middle Bollinger Band, and then this parabolic SAR bull flip. Notice the green dots flip below the candles. Also, there was a bullish crossover here on MACD on both time frames, and so that was telling you that this chart was heating up and a new trend was starting, a new uptrend. And so this week, what we were looking for, notice the 50-week moving average got hit last week and it pulled back, and that was the key level to break. Well, now there's a break above that this week. So now on a pullback, you want to see the 50-week moving average at 192 hold. If that holds, that could be the springboard to shoot up to the 100-week moving average at 424. That is the next key resistance level, and so we'll be looking for that to possibly be tested in the future. You can see here that this is a resistance zone that's being hit right now, and so this is going to be a tough level to break that it's hitting right here. If it can get through there, then you're looking at this 424 zone right here. You never know how high they're going to push these things. That's why we recommend when stocks are breaking out, to follow the intraday charts. And so what we like to do is follow this 15-minute chart. And as you can see here, on the 15-minute chart, there's this very strong uptrend. Notice how tight the Bollinger Bands were back on the 24th. When you see the tight Bollinger Bands like this is signaling to you that a change in trend is coming, that this consolidation is going to end, and that a new trend is going to begin. And you always look for a breakout to the upside to signal that it's time to enter for the next run. This is what we were doing. We were watching this like a hawk here at this 1 to 120 zone, and then once it broke out on the 25th, that was our green light that, okay, this is ready to go. And now we've been rewarded with this multi-day run. zone. What's going on now is this repeat of this pattern. Notice the end of day on the 25th, it closed below the middle Bollinger Band, and then on the 26th again, the middle Bollinger Band broke and it closed below. Each time the 50-day area zone has held. Today it's back at that level. It's a spike above, a big move, push higher, and then now it's cruising back to the middle Bollinger Band. And so the question is it going to break the middle Bollinger Band and drop down to this 50-day this 50 simple moving average, or is it going to hold that and keep going higher? It's going to need to break this 320 to 330 resistance zone to head to that 100-week moving average on the weekly chart. It failed to hold the middle Bollinger Band, and if it turns into resistance, then this 50 simple moving average is going to be on deck. If it breaks below the 50, that's when you know the chart is like really breaking down, and you could see a big drop down to the 100 simple moving average. So there are some red flags. There's the bearish crossover on MACD, just like the previous days, and so and notice parabolic SAR, the green dots, they're getting ready to flip above the candles. So those are red flags and something to think about. This does look like an Elliott wave pattern where you have the 1, 2, 3, 4, 5 down, and then this looks like it could be the start of a correction pattern. So yeah, check out, it looks like to me like this could see a Elliott wave correction pattern form on the intraday charts off of the current setup. Okay, if you'd like to learn more about chart patterns, about technical analysis, if you want to learn about Japanese candlestick patterns, if you're a beginner, if you're intermediate, or we even try to help people that are more advanced, at whatever level you're on, we'll do our best to help you succeed. All right, so this is a lot of fun for us. We hope you enjoy the charts as well. Come check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.